Our today's topic is management accounting. Before moving into management accounting, we should be clear with what are all the accounting streams are there. Right from the inception, you would have studied about financial accounting. Actually, when we started to learn the term accounting, definitely you would have started in the aspect of financial accounting, that is in the set of books maintained in financial accounting, right from the journal, ledger, then trial balance, profit and loss account, balance sheet, and so many accounting concepts. That is sort of bookkeeping, everything, whatever the transactions are happening in the company, immediately that will be recorded in the books of accounts. That's what known as financial accounting. The first major stream of accounting is financial accounting. It's especially related with the recording of financial transactions, reporting of financial results, then preparation of financial statements, then to whom means to the external users, those who are interested in the company's information, that's the stakeholders of the company. To them, this financial accounting information will be very useful. That's what financial accounting. Then second stream of accounting is a cost accounting. In this case, you see the cost is an exclusive concept taken, and all the dimensions of the cost will be studied in that. What a cost in the sense, it's nothing but the total amount of expenses spent in the company. So the entire cost will be recorded, that is classified into different categories, that will be recorded. The recorded cost will be analyzed. Then so many cost statements will be prepared related to that. The information of the analysis of cost accounting will be very much useful to the internal users, that is management authorities, then so many workers carrying out all the business transactions in the different cadre, we can say. Then third stream of accounting is management accounting. That is, it includes, actually it includes a recording of all financial and other data. Then the next important part of the management accounting is analysis. Analysis part is the unique nature of management accounting, we can say. Then why do we analyze? Why do we analyze these statements, financial statements? For helping the management to take decisions in the future for the betterment of the company. Then what are the target group of people, the users of management accounting? You see the internal users, those who are working and carrying out the transactions in all levels of management. Actually, management accounting is a very, very broader concept that encompasses both financial and cost accounting, we can say. Generally, you see, in a company, there are various levels of management. Some people may be working in supervisory level, in middle level management, in top cadre, then CEO, then other authorities. All these people, you just see, all these people in the higher level, they need information about what is happening in the company in various aspects, right from the CEO, manager, managing director, other top and middle management people. They need information, but what kind of information? You see, customized information, precise information, that is accurate information, timely information should be reached to all these people. What's the purpose behind it? Why do they collect these kind of information? Definitely they have to study, they have to keep in touch with the transactions happening in the company. Based on that, they will be taking the decisions in the future for the welfare of the company, how to stabilize the company in a better way in the future, how to enhance the efficiency of the company in the future. That is done by the management accounting. Why management accounting? Now the concept is, we have seen the three streams of accounting. We know now very well why do we use the financial accounting. Just for making the records, we are entering all the transactions. Bookkeeping is maintained in a very proper way. Every year, all the accounts will be prepared, then that will be displayed in the annual report of the company. Then cost accounting, you see, how much is the cost spent by the company each and every time. Then how can we control the cost? We know that controlling of the cost is equal to savings of the revenue. Controlling of the cost, cutting down the expenses is equal to earning more revenue. So cost accounting. Then third stream is management accounting. So in this case, you see, now you just imagine financial statements are ready, right from the journal, ledger and trial balance, everything we have prepared. And now in front of us, all the records are available for the current year, for the previous year, for the year before previous year, all the records are available. But you see, by keeping all the records, we can come to know just this is what the profitability position, this is what the financial position, these are all the assets held by the company, these are all the liabilities the company uh, should make the payment in the future. This is what the profit of the company. Then suppose if there is any loss or expenses, everything we can come to know. That's it. But in case of management accounting, you see, we are putting a question, why for all the aspects we have to raise a question, why. Not only in management accounting, generally psychologists are saying, usually the human beings, they have to ask the question why, how, why is it happening, then how it can be done, what are all the reasons for that. Likewise, each and every time we have to put a question why for all the aspects. That starts the analysis. Naturally, in case of the characters of the human being, you see, each and every time we have to do the self analysis by asking the question why am I like this, why am I getting angry like this, why am I getting a low score in this particular area. Likewise, we have to raise so many questions in our daily life. That analysis, that self analysis only will be making us to get rid of that particular problem in the future. Then we can mold ourselves, we can groom our personality in the future in a integrated way. The same thing we can apply to the management accounting also. You see, as you are the students, I'm saying an example from your side. So many tests are conducted in the classes, a mark of first test, marks of second test, mark of third test, everything you are collecting from your mom and you are keeping it in a file. That is what known as simply historical method of bookkeeping. It is what known as financial accounting. Just you are receiving, you are seeing the mark and you are keeping it in a file. Whenever you want to see it, again you are taking it out, then you are seeing it, and again you are close it in a file. See, you imagine the same thing to the company. Every year, journal, ledger, trial balance, profit and loss account, balance sheet, everything is prepared by the company. Then keep it in the they keep it in the separate annual report. This is what known as financial accounting. This is what known as financial accounting. But in the same way, we can apply in the aspect of management accounting. You see, first test mark, second test mark, third test mark. You are keeping the papers in front of you. You are asking a question, why? Why I scored 70 marks in the first test, 60 in the second test, again 50 in the last test. Why? What's the reason behind it? Where I committed mistake? A lack of preparation, or lack of concentration, or lack of listening in the class, no observation, whether I didn't understand that properly, whatever it is, you can put so many questions in front of you. That part is known as analysis. So, through this analysis only, you can take the steps in the future, you can take the decisions in the future to score up your marks. The same thing is happening in management accounting. You see, a company's sales, we can take it as company sales, the sales of first branch, sales of second branch, sales of the third branch. The sales of the different branches can be analyzed in this case. You see, why there is a reduction in the sales in the particular branch, why there is a hike in the sales in a particular branch. There may be so many reasons behind it. So those reasons should be analyzed. Though the same way we can take expenses of the current year, expenses of the previous year, expenses of the year before previous year. You can take, then we can analyze the expenses of the company. Why we have to put a question, why there is a reduction in the expenses in this particular year, what kind of strategies we adopted for the reduction. If there is a hike in the expenses, means what happened, what's the special thing happened to raise the cost in that particular year. Likewise, we have to ask the question again and again, why. There stands management accounting. Analysis, we are saying analysis of the accounts. Okay, analysis of what? Analysis of financial statements. Financial statement, what are called as financial statement? We are preparing right from the journal, ledger, trial balance, subsidiary books, so many books of accounts we are maintaining. The extract of all the books will be given at the end in a nutshell. That's what known as financial statements. It's nothing but trading and profit and loss account and balance sheet. Trading and profit and loss account, which will be including all the expenses and revenues of the concern, in order to identify the general profitability, that is gross profitability of the company. Then net profit, up until the production, how much profit is earned by the company. Then after the production stage, in the administration level, in the selling level, in the distribution level, what are all the expenses are spent, everything will be considered to identify the net profit of the company. Then in a balance sheet, we know the position of the asset and the liabilities. But there is an exclusive difference between the trading and profit and loss account and balance sheet. Because for trading and profit and loss account, we used to use the term trading and profit and loss account for the year ending. But for the balance sheet, we use the term as on. Why do we use for trading and profit and loss account? We are using for the year ending. For balance sheet, we are using the term as on. If you use the for the year ending, that is meant for that particular year. For the particular year, these are all the expenses, income, sales, purchases and everything for that current year. But balance sheet, you see, each and every, even though we are preparing the balance sheet every year, but it is an accumulated financial position of the company. It is not the financial position of the company for that particular year. Accumulated a position right from the inception. If the company is having this many lands, buildings and machineries and so many things, everything will be carried over and the end result, accumulated result, will be produced in the balance sheet. That's why we are using the term as on. This is what the core difference between the profit and loss account and balance sheet. Even though both of them are an important components of financial statement, this is what the difference between the profit and loss account and the balance sheet. Now, we are going to analyze only these financial statements. The entire concepts in the financial statement will be analyzed. Then it will be reported to the top level management authorities to make them understand what is going on inside the company. Based on this accurate, precise information, timely information, they will be able to take a fruitful decision for the betterment of the company in the future. So this is what the management accounting. So in the management accounting is giving the answer for why. All whys will be answered in management accounting. In this context only, management accounting is differing from the other two accounting streams, financial accounting and cost accounting. So now, how the analysis, we are saying we have to analyze a financial statement. It's okay. How is it possible in the management accounting to analyze the entire concepts in the financial statements? So many tools and techniques are available in the management accounting. This is also a unique feature of management accounting, that is using various tools and techniques, special tools. We can use financial statement analysis, ratio analysis, standard costing, budgetary control, marginal costing. Likewise, so many tools are available in management accounting to analyze the financial statements. So now we can very well understand the task of management accounting is furnishing accounting data to management for decision making in improving efficiency and achieving organizational goals. This is what the aim of management accounting. What are all the uniqueness of management accounting? It's a modern accounting stream, management accounting. You see, in all the companies, you can, if you go and verify the accounting transactions maintained in the company, exactly the same. There's no difference between the theoretical aspects of the management accounting and practical aspects. If you visit to the company, if you go and see and verifying their records, definitely the analysis will be going on. They may be using the ratio analysis, a cash flow statement, fund flow statement, marginal costing techniques, budgetary controlling techniques. Everything is going on in the concerns. So the up to that extent, the management accounting has its own uniqueness. It's providing a data, that is accounting information to the top level authorities. Then one interesting thing you see, cause and effect analysis is there in the management accounting. In case of financial accounting, you see, this is what the great missing in financial accounting. There is no analysis for the cause, there is no study about the effect. Only just what has happened, that will be recorded, that's it. But in management accounting, you see cause and effect analysis for each and every item which are happening in the company. Then use of special techniques, so many special techniques as we discussed. There is ratio analysis, so many comparative statements, comparative profit and loss account, comparative balance sheet, common size balance sheet, common size profit and loss account, fund flow statement, cash flow statements, marginal costing, standard costing. So many special techniques are there in management accounting. Then you see taking important decision, that is what the prime aspect of the management accounting. Okay, for what these aspects, why do we provide timely information, precise and customized information to the top level authorities? Why we have to analyze the cause and effect of each and every item? Why do we use these special techniques? Or why we have to help the management authorities to take the decisions and all? Everything is to achieve the objectives of the company, to achieve the vision and mission of the company. But one flexible aspects of the management accounting, you see, there is no fixed norms. If you see the financial accounting, there will be so many fixed norms, or that this is a way to prepare the balance sheet, this is a way you have to follow these accounting standards, this and that, like that. So many fixed norms are there. But in case of management accounting, no fixed norms, no hard and fast rule. It is specially designed according to the convenience of the company. You can adopt it to increase the efficiency of the company. Special thing is it is totally related with the forecasting. What will happen in the future? That assumption, that perception, there stands the management accounting, concerned with the forecasting. What will happen in the future? In the future, is there any possibility of reducing the cost? In future, is there any possibility of increasing the revenue of the company? In future, is there any possibility of all the aspects, everything, in financial aspect, in cost aspect, and everything we can say. So this is what the concept of management accounting. So why do we use, apart from the financial accounting and the cost accounting, why do we use management accounting? Means this is what the concept. This is what the concept is. Entirely different from the historical method of bookkeeping, that is financial accounting. It is entirely different from the cost accounting also. Cost accounting is a narrow down concept, how to control the cost, how to cut down the cost. But management accounting encompasses the both financial and cost data, and it is also related with the analysis part. Not only analysis, not merely analysis. Based on the analysis, information will be given to the top level authority, not only top level authorities, so many levels of authorities. They need information to them. The entire information, customized, systematic information will be given to them. Then by keeping all the information, they will be discussing, they will be analyzing, then they will be taking the decisions in the future for the betterment of the company. This is what the management accounting concept. Thank you. Good morning, girls.